Hi, my name is Kerry Silverman, and I'm an adjunct professor of law at Silicon Valley University Law School. I teach contract law, and I also teach tort law and civil procedure, and some other courses that may or may not interest you. The point is, I also teach for the Negotiation Institute of America, so that means you're getting the best negotiation team in Northern California. And we're talking today about loan modification. Now, as you know, there are a myriad of companies out there that are, for lack of a better expression, scam operations, where they're just going to take your money and really do nothing for you. They might charge you $5,000 or $7,000, and they're not really going to do anything except take your money, and 3 months later they're saying, oh, sorry, we couldn't do anything for you. Because I'm a law professor, I am going to commit myself to making sure that you get the best possible deal on your loan modification. We have many, many happy clients that have gone through our process, and we build our business based on client testimonials and referrals. We don't do any other advertising. We don't do television or radio advertising like some of the firms that may call you at home at dinner time telling you that they can, work some kind of miracle. What I'm trying to do today is dispel some myths that have been promulgated across the United States about loan modifications. One is that I want you to understand that loan modification is a long process. It takes at least 3 to 4 months. So if you come into my office today, you probably won't get any results for at least 3 to 4 months. Additionally, there's been a lot of news about being able to lower the principal balance of your mortgage based on the fair market value of your property. Very, very few banks are willing to do this. As a matter of fact, probably 5% of the banks out there are willing to take that type of a loss. Now, think about it. By modifying your loan, which means they're working with your existing loan and lowering the interest rate to about 3 to 4% fixed, they're already taking a loss. So why would they lower the principal balance on your mortgage unless they're really afraid that they're going to be taking back a horribly non-performing property? Additionally, what I'd like you to think about is that loan modifications is not mandated by any law. There's no rule of law, there's no code of civil procedure mandating that a bank modifies your loan. In some ways, it's like a gift. It's the bank saying, look, yeah, we understand that you've been having some type of a hardship, and to help you out, we're going to modify your loan. Now, the other side of the story is that the bank has probably been making tons of money off you as you've been paying your mortgage payment loyally for the last 2, 3, 4, 5 years. Now, how do we get into this situation? In the United States, property values went down, yet our mortgages stayed the same or actually went up. So what happens if your property values are going down and your mortgage payments going up? We panic, right? That's not a good deal for us consumers. So what we do is we paint a picture to the banks and we tell them, look, you don't want to take this property back. Why don't you work with the people that are already in the house instead of going through the foreclosure and eviction procedure, which is going to cost you a lot of money? Work with the buyers that have already demonstrated good faith by making their mortgage payment over time. Now, I also want you to understand the difference between a forbearance and a loan modification. If you're 5, 6, 7 months behind on your mortgage, then you're hoping that the bank will not take your property back, and they will work out a forbearance, which means they will allow you to make up your missed mortgage payments at the end of the loan term. Do not confuse that with a loan modification, where they're actually lowering your mortgage interest rate, and what we're seeing now is typically 3 to 4%. The question that I typically ask my client when they walk through the door is, hey, if I could lower your mortgage payment by about 30%, both your first and your second mortgage, if I can lower those by 30%, would you be happy? If the answer is no, then I'm not going to be able to do anything for you, because that's the average deal that we're getting today. The other thing that I really want to impress upon you is that you must qualify for the loan modifications. Now again, there are tons of companies out there that would gladly take your money whether you qualify or not. We're not going to do that. We go through a strict underwriting analysis before we even take your case. Now here's the interesting thing. You can't be making too much money, right? But on the other hand, you can't be destitute. There has to be a little bit of a sweet spot, I call it. So after your expenses, do you have a little bit of money left over? Maybe $500, $600, $700, $800 a month. Do you have a little bit of a cushion? Why? Well, if you make too much money, the bank's going to say, well, why do we need to modify the loan? You can afford it. But if you make too little money, the bank's going to say, even if we modify, you're not going to be able to afford your mortgage, so file bankruptcy or we'll just foreclose on the house. It's sort of common sense. Now again, this process takes a long time. Many clients we're turning away, and many clients I talk out of doing the loan modification. It's not for everybody. If you want to save money on your mortgage, if you want to reduce your mortgage payment by about 30%, and maybe reduce the principal balance. Remember, that's a remote possibility. Of course, we always ask for that, but many banks are not willing to do the principal reduction. They're not willing to take a big hit like that. They are willing to work with you on a forbearance or by lowering your mortgage payment so you can stay in your house. They're going to do an analysis. Is it going to cost more money for us to hire lawyers and go through the foreclosure process or modify the loan? It's merely a financial analysis. Again, my name's Kerry Silverman. We work for Loan Deal Incorporated. We're local. We're on the Alameda in San Jose. Again, that's sort of one of the benefits of working with us. We are local. We're not, some company down in Los Angeles or Florida that's making a bunch of phone calls from a boiler room atmosphere. We're real people. You can come in and talk to us, right? We're going to tell you if you qualify or not at the first meeting. The first meeting is complimentary. We're also endorsed by the Better Business Bureau, right? We have a good rating with the Better Business Bureau. We have helped a lot of families. We have helped a lot of families not only save their homes and postpone trustee sales, but we have lowered mortgage payments. I'll give you one more example. I have a client, a really great guy. He has a nursing home in Contra Costa County. We lowered his principal, interest, and property taxes from about $8,000 a month to about $4,000 a month. That's about a 50% savings. Now he can do other things. Again, my name's Kerry Silverman. Look us up on the web, www.loandealusa.com, 408-834-7550. Come on in for a complimentary consultation. Let's see if we can help you save your house.